Welcome to TradeTheMBI.com. This is Jonas reports for the 27th, and you can see the market continues its move with the magenta clearly above. And we actually got green over cyan as well, and the rising red. So these are all positives, and the shakeout pretty clean from that standpoint. So we're pushing towards those all-time highs. When we look at it from a NASDAQ point of view, you can see that we actually exceeded it. We go all the way back over here. We're just right at it. Not correct, that one. Though the close, depends. So it's a higher close than. Let me just slide that back a fraction, and you get to see the peak right there. This one, where was the close? Oh, 8 something. So we're within striking distance of it today. We'll likely get there. I don't see that as a big deal. But as you push into the new highs, you see the reality is now that treasuries continue to fade in yield, it becomes less attractive. That forces money into the market. And of course, this is telling you also the Fed is wrong. The market knows it, and they're going to go ahead and react anyway. And so that's always a counterplay. And the reality is what's going to happen is U.S. consumers as well as banks and that are going to be the buyers of debt. It'll be less in the foreign side. We've already seen the Chinese liquidating a large portion, but that was mostly because of their inability of their own economy to survive the implosion that they're having. And the demographics for them look worse than just about any other country when you start to expand in the next 15 plus years. They're in a negative population growth in quite a spiral, nonetheless. So what they'll do with that is an interesting one. Oil, definitely within a short signal. So we'll see if it's able to start breaking down from this value. Shakeout hasn't moved negative yet, so still holding on to just a little bit. It does have a complete reset of DOC steel here, so that could be enough to keep it from imploding further. And of course, that's going to be really a question of draw, and whether or not the U.S. comes up with some kind of sanction change with the Iranians. That would change a lot of the supply constraint issues. Being worst case for Russia. You can see the belief in the Eurozone is just through the roof, exponential. Still doesn't make any sense in the math, but it's okay. As you get the continued discount, it just keeps making U.S. rates more and more attractive. Not only do you get the bonus of the 20% move in, euro increase, you also get the benefit of a higher yield within it. It's no brainer for European moving their money. From a gold standpoint, yeah, we knew that the weakness would come with gold simply because you've lost a lot of the uncertainties and a lot of the angst. The Ukraine situation, while it's still going on, it's repetitive now, and the Russians continue to make advances. The U.S. isn't getting involved in any significant way. Europeans can claim they're going to spend their way out of it, but not going to happen. For Bitcoin, yeah, it's a wash. There's really no incentive at this particular stage, so it's just got the momentum. But you can see there's a rising short, so it could be range bound for a little bit. Still has the magenta above, so it can still continue to move higher. Shakeout's just about moved to the positive, so that becomes kind of critical. If it can make it to the positive, then it will push towards the highs. But sort of in this beginning of the summer doldrums, particularly as we head towards the 4th of July weekend, things are going to be kind of casual, and it'll pick up again after the holiday. People are going to cut it short, and that's going to leave the wild trade for the 4th of July right before and then right after, as people are still off and gone, and ETH not doing anything particularly exciting. From the 50K, it got popped out at that little blip, but then as soon as Magenta took back over, jumped back into it, and of course rode that all the way, and now you've got a one for MBI White. So shorts are not active in this situation at all, and everything's looking good until we start to get numbers. And of course, as long as things continue to just plug away, that's still a bonus. Where else are you going to put your money? No choice. So that sort of leads. That's where we're riding that ugly pain here, where it's sort of like blah, going up and then fading a little bit, up, fading a little bit, but staying all the way above 76 for the most part until the end of the day. Faded a little bit further, but post market, yeah, modestly rosy. we're up slightly from the open close area from before here in the European session. So, barring anything major in the world, we're just in this sort of slide glide until data really starts to impact things, and we'll see what the effect of that is. The big beautiful bill isn't moving anywhere, and a lot of the other delays that have still been in place push everything to the fall, which is really a critical time period. The Fed being so late in the situation, we'll see if the entrepreneurs really are the ones that would have to save, where things are going economically, because they're certainly getting no help whatsoever from the Fed side of things, and we'll see how that one plays out. But there's still the potential for it. But I think that there are more headwinds than positives, and as we get to the peaks of things, when we start to see short signals, it's going to be a little bit more active than some may be expecting, particularly as we get in towards September. And that, as always, though, anything relevant, I'll put it on our team chat. Have a good one. Trade well.